Hey everybody, Chuck Barone, Thursday, November the 3rd, 2022. Welcome to the show and the day. More crazy in the world and of course, more crazy in the markets. As always, we want to thank everybody for their support for the show. We really appreciate you guys watching the videos and being here. All your likes and questions and comments. We appreciate every single thing you guys do for the channel. We appreciate it. And the markets today, well, today was fallout day. You know, we had to come to terms with yesterday. Traders and analysts have been going through Powell's comments, trying to get an idea of where the Fed is at and where they're going. I think the new consensus is that more rate hikes are coming. I think everybody's pretty much believing that we will have a half-point increase in December. And they're talking about more smaller rate hikes going through even all the way through next year. So we'll see, guys. I think that, you know, the Fed is really punishing this economy. If you're in, I guess it's really kind of mixed though, because some of the data we're getting today shows other. But if you're in real estate like I am, you know, we're at depression levels here. So we'll see. I think that the Fed would like to ease up a little bit on slamming the brakes on how they've been doing. But, you know, this economy is not giving them reason to do that yet. We'll follow the data. We'll see where it goes. In the markets today, well, you know, stocks were down. Not a surprise. It was a choppy day, though. It was, you know, they kind of tried to rally a little bit and then kind of just fell out at the end. I think they're still digesting this this Fed decision, and you know, of course, I guess the Fed makes the point it wants to make, right? But they said that you know, if the Fed is bad, but the economy still good, some earnings coming from companies that are good, data coming that's good. So the bond market, or the bonds and stocks, both getting mixed signals, gyrating around like crazy as the data comes in day to day. So stocks down today across the board. Bonds also down today, raising yields up. It was a choppy session, actually. The prices were down, rallying a little bit toward the end here. The 10-year bond finishing today at 4.12%, 4.12%, up 6 basis points. The 10-year really ripping today, though, up 14 basis points, sitting at 4.71. The shorter term stuff really taking off today, selling off. Obviously, this is a sign that they believe the Fed's going to keep these rate hikes going. I think that now, you know, you got the spread between the 10-year and the 2-year just keeps growing. 59 basis points now. They say that typically the wider the spread, the negative spread, the deeper the recession. So this is not pointing toward good news. But if you're a fixed income investor and you're looking at 2-year treasuries at 4.71, you know, you got to be eyeballing 5% coming up here. Not too shabby. Dollar today, and of course on the interest rate hike, up pretty strongly, sitting at 112.98 on the index. Still down, still not high, not reaching its high at over 114, but nonetheless, the king of currencies, relative value. It's still not doing so great against the supermarket or the gas station, but against the yen and against the pound, it's doing good. Metals today had a mixed day, with gold closing down $4.30, $1,631.86 per ounce. Silver actually managing to eke out a gain today, $19.58 per ounce. Metals holding their own against a strong dollar. That's a pretty good day for metals. Oil today down 2%, actually, over 2% to $87.94 per barrel of West Texas Intermediate. Oil's gyrating around. I don't think it's really found its footing very well yet. Natural gas, again, another crazy day in this market, down almost 6% today. $5.89 for their million BTUs. That market's just been the wildest ride with ups and downs of 5s and 10s and even more than 10% per day. Crazy. I think that these markets have they don't have anything really to hang their hat on to stabilize it all. With all the stuff going on in the world geopolitically and everything else, not a real firm foundation to get oil prices stable. Bitcoin today up small, but it was still nice to see it have an up day on a down day for the stock market. Bitcoin seems to be holding up above 20,000 pretty strong. I think that for you Bitcoin people, you got a little bit of hope for optimism here. Nice to see it have an up day with stocks down. The news you guys need to hear today, well, unemployment numbers come in, jobless claims coming in at 217,000 versus an estimated 220,000. Employment's still strong, guys. I mean, this jobs market is really going great guns. It's given the Fed cover to continue raising these rates at the pace they're raising them. They're really been focusing on the employment rate, and in spite of all these rate hikes, 3 3/4 so far this year, they can't get the jobless market to cool down even a little bit. I don't know what kind of jobs these are, guys. I'm hearing all kinds of mixed stuff and comments and from viewers talking about there's supposedly a lot of openings, but if you apply for them, no one ever responds to you. Other people saying jobs are good, there's good jobs available. Again, it's just a mixed bag of crazy, which makes it so difficult to try to give good advice on what you should be doing. It's nutsy. The factory orders today coming in, rising again. So factory orders staying strong, up 0.3% in September, a good month, following up 0.2 in August. So factory orders going up into the face of this recession and higher rates. I think that's good for the U.S. economy. Again, adding just more mixed signals in on really where are we in this economy. It seems like it's almost a sector by sector analysis you have to do to get an overall picture of where we're at, because it seems like some parts of the economy are still doing great, some parts of the economy not so great, and some parts of the economy really not so great. So again, now we're going to get into the other side of the economic news. U.S. services industry slowing down, less business for these service businesses, prices rising. So this is the worst of it, right? Growth in U.S. services is right now at its slowest pace in 2.5 years. The ISM falls to 54.4 from 56.7 last month. That's a pretty big drop. The economists expected 55.5, so significantly bigger drop than they were expecting. Services industry not looking good, guys. Of course, being in the mortgage business and real estate, we're service industries, and our industries are probably a big reason why this number has fallen so far so fast. Now keep in mind though that any number above 50% signals growth in that sector, so services are still growing, just at a snail's pace. And finally today, this is an interesting one, U.S. productivity continues to collapse. They said the numbers were up for this month, but they show slow growth coming in at 0.3% they're estimating for the year. So we're not even going to get 1% productivity growth. The second quarter of this year was actually down. Productivity was down 4.1%. This gives employers major headaches. Now they have to hire more people to do the same amount of work or the expected amount of work. Maybe that's why this employment situation is as hot as it is. I'm just wondering why productivity is down. They tell you these numbers. They didn't really give any indication of why they thought it was. Now, what do you guys think about this? You think it's this, we've heard about this quiet quitting phenomenon, right? Where people don't actually quit their job. They just do the minimum necessary to keep the job. So they're not so much worried about going the extra mile for the company. They're not so worried about being loyal to the company or their boss or what their results are, the competitive stuff kind of out the door. And it's more like just doing the minimum. It's kind of a odd revolt against the corporate world, I guess. You think that's part of it? You think people just want to be less productive? Or do you think it's something else? Because I got to say, I'm kind of confused by it. I know my productivity is down, but not by my choice, that's for sure. So I don't know. That's kind of a confusing one there. But just again, so now you got on one side of the coin, factory orders rising, continuing to go up, actually increasing their pace. Unemployment numbers coming down, employment strong. And on the other side of the coin, you got the services industry growing at its slowest pace in 2.5 years. Now let's say this, guys, it's great that factory orders are good, but manufacturing is only 12% of the economy. Services are the bulk of it. So slowing that down, I guess, is pointing toward recession coming. And then you got this productivity issue, where workers are just not as productive as they were last year or the year before that. I can't remember the last time we really had a productivity slowdown. The world we're living in is off its rocker. It's upside down crazy. The stuff we've been saying all along, please, guys, listen, man. We'll kind of give you an all clear when it looks like it's time to get more aggressive with your investments. I don't believe now is that time. Get yourself in a defensive position. Look to be finding ways, dividend paying stocks. That's why I love utilities. I love dividend payers, the consumer non-durables, preferred stocks. We've been talking about healthcare stocks, military stuff. Obviously with wars going and we're producing so many weapons for Ukraine, these stocks are going to go up. Their earnings are going to go up. If you're following that little playbook there, you're probably doing okay. This market looks crappy, and the signals are mixed on what's going to happen next. I mean, I don't care who you are. If you're talking with certainty about what you know is going to happen, well, they say the guy that knows for sure is the guy that doesn't know jack. Anyway, that's all we got for today, guys. We appreciate your support. As always, if you like what you're hearing, hit the like button. Ask your questions in the comment section. If you have a question that's a little more detailed, a little more lengthy, so to speak, I guess, for lack of a better word, ask Chuck Barone at gmail.com. I'll answer the questions. I've been hitting those pretty good lately. If you guys need advice, ask Chuck Barone at gmail.com. We'll be back tomorrow to wrap up a crazy week. Take care until we talk then. Thanks.